All right, so we will dive right into this, and again, tonight is just kind of a follow-up on some concepts, some kind of fun things, and I just found, and one of the good things about having a book out and doing kind of doing all this stuff is just having a lot of contacts in the industry, and so I kind of get a lot of it's over like discussions on just kind of what's going on in the market and what's causing, the current ebbs and flows. And it's always kind of fun when it sets up and it's like, oh, cool. Well, let's start taking advantage of that. And so what I want to do tonight is just kind of dive right into that. Yeah, what's funny is I spent 5 years in Boston and 2 years in Minnesota. So a quarter inch of snow. Here, a quarter inch of snow could shut down the city. And I remember one time in Minnesota, there was 1.5 feet of snow and nothing was delayed. Like, it was just normal. So, yeah, it's kind of funny there. Hey, Andrew. Really? Wow. So, pretty cool there. All right, let's dive in. So, what's up with this current market? Just buy the dip, right? Well, here's a new reality that's taken shape here. And the idea is that, of course, there's momentum trading, which is great when everything aligns, okay, with that type of setup. And momentum trading is great when we've got an uptrend going on, which obviously is what we've had all of 2017. But one of the things that you'll notice is that the VIX during this uptrend has stayed very, very low, which is actually not usual. Typically, especially in an uptrend, the VIX is actually fairly volatile because lots of funds are hedging. But instead of going to the VIX to hedge, they're doing things completely different now. And it's important to understand that because not only is there a trade there that we can take advantage of and profit from, but if we don't know it, we can actually get completely run over. So anybody that held long, like through the last pullback in NVIDIA, got steamrolled by something that, with the right signals, you can see, gosh, I don't want to be in this anymore. Okay, that kind of stuff. So what most of the funds and algos and black boxes, and these are all kind of similar. So funds or algos, they're all trading by computers and they all have programs, and these programs are trying to front run each other. And what happens is that when they start front running each other and you know what the signals are, it actually gets kind of easy to trade with them, okay? So what's happened is a lot of them have switched to a very aggressive campaign of reversion to the mean type trading, all right? Now, there's two kinds of trading. So the two kinds of trading are momentum trading, where you've got a, sideways consolidation, and then you typically get a breakout, obviously in bullish markets, or a breakdown in bearish markets. And then there's kind of the pullback and the continuation there. Reversion to the mean trading is this part right here. Okay, so there's the momentum part, and then there's reversion to the mean. But what's happening right now is that reversion to the mean is getting more violent and exacerbated in the various sectors and specific individual stocks within the sectors, but it's not really happening on the indexes themselves. Okay, this is the first time I've seen this, and it is a new trading programs that are being released and followed by all these funds and all these algos, and we just want to be aware of it so we don't get run over by it, which is no good. So what we have to do is be aware of this, or it will always catch us off guard, okay? We want to identify exactly when they are doing it, okay? And then we just want to attach ourselves to the trade flow. We, as individual traders, are not going to be able to move the market. These guys can. We want to spot when they're building up positions to do that and just trade with them, and it's really as simple as that. So at the end of the day, we, as individual traders, cannot fight the funds. However, if you guys are familiar with this fish, this is a remora. And what a remora does is that it's not a very good swimmer, and it's not very good at catching prey. However, the universe decided to give it a large sucker on its head so it could attach itself to things like turtles and sharks. And so when they're eating, it can sit there and pick up the scraps. And that's all we're doing. And it's a nice, clean, easy way to trade. And if you think of this is a whale shark right here. These things, what the funds do is they start building up positions so they can gorge themselves on a move, right? They can actually cause the move to happen, which we can't. We just identify when it's happening, and we attach ourselves, and we pick up some profits for our own accounts, all right? And so we just want to be aware of when that's happening. I'm at work watching this. That's the best. So we kind of, there's, so what do we call this? Needle in the haystack, there's different things like that, but we just, it is so painful to see this stuff after the fact, and it's obviously easy to see this stuff after the fact, but seeing this stuff after the fact does not help us in any way, shape, or form. So we want to be able to identify when these algos are building up positions for this, okay, specific triggers. So at the end of the day, it's all about knowing when focused expansion type moves are setting up. Okay, so what is that? Again, a review. So I'm going to use uptrend examples just because everything's in an uptrend, but it works the same with a downtrend. So if we have a move up, and then there's going to be a consolidating period, okay? And then from there, there's going to be another move up, all right? But then at some point, what is going to happen is going to be a violent reversion back to the weekly mean, okay? This is the stuff that's happening there. So I'm interested in identifying this and catching it, okay? And I'm interested in avoiding the chop, but I am interested in catching the next momentum move. But more importantly, I'm interested in is that after a momentum move, are the algos getting in to rip this sucker down? Okay, because there's two things that happen here. You have a momentum move, and then you have a sideways movement. All right, that's fine. That's great. You can actually hold through that if you want to. But if you've got a momentum move, and then you see that the algos and the black boxes are stepping in, and they're starting to fade that, what's going to happen is a violent reversion to the mean, and if you're not aware of that, it can get very, very, very frustrating. But if you are aware of that, it can become very profitable because they're fast moves, okay? They're fast moves. So guessing when something is going to make a decent move is like going to Vegas. It's a guess. I wonder if this is going to be red or black. I wonder if this is going to be a 7 or an 11. I wonder if this is going to be, over or under 17. It's and it's not even 50-50 odds at best. And so we want to avoid those situations. So the question that we're going to look at tonight is, what is the specific setup to look for if a stock is under massive fund accumulation, okay, and getting ready to take off? And from there, when do the funds, and really it's more of the algos. And so I kind of think of it as this way. You've got hedge funds, mutual funds that are kind of, all pouring into the same stocks because they want to get that high beta and they want to beat the indexes, because if they beat the indexes, they're going to get larger inflows of funds and their bonuses are going to be bigger, okay? The reason these guys buy stocks is kind of a joke. But what happens then is there's a lot of shops out there of sophisticated algorithmic-based investors that see this, and they start front-running these guys when they're going to unload. Okay, and there's a couple of reasons why they have to unload, which we'll talk about. So as a trader, instead of getting run over by these moves, what would it look like to know exactly when the funds are starting this process, right? And that's always the question that got interested. Okay, so the best trades seem to happen out of the blue. Hardly anyone sees it coming. And then in hindsight, but only in hindsight, is it obvious. Okay, but in the moment when everything else that's going on is just noise, which begs the question, what do the best trades look like before they actually happen? Okay, and so what's happening with this year is what we're seeing is low volatility and kind of low volume. But what we want to be careful of here is that this year has been characterized by low volatility as measured by the VIX, okay? But what's happening this year is that in a normal year, again, when you have that uptrend, there's a lot of hedging by buying put options, which pops up the VIX, okay? And that keeps everything kind of balanced. This strategy has been abandoned by a lot of the hedge funds, and instead there's an aggressive reversion to the mean strategy and sector rotation strategy that's being implemented to counterbalance the risk of the sectors or of the indexes going higher, okay? And don't worry if you don't even have to know all this stuff, but once you understand the signals, it just makes it a lot easier, okay? And we can look at those. Yeah, we can look at AKM and a couple of others if you'd like to. So first of all, for sector rotation, for those of you that don't know, this happens all the time. So you can see right here over the last 5 days, when this was taken, while the S&Ps were up 1.5%, you had consumer discretionary and energy getting most of the inflows, whereas real estate and tech was getting the outflows. Okay, this is happening all the time, and that's called sector rotation. So one of the questions that'll pop up is what constitutes sector rotation? What constitutes a signal that the funds are looking at that tells them, hey, we need to start rotating out of tech and into energy, okay? Or we need to start rotating out of this stock and into the stock. And that is a critical signal that we want to understand. And we're going to get to that a little bit later. So with funds all with sector rotation, okay, so with sector rotation, all the funds are piling into tech, okay, but when then tech reaches a certain level, they got to reduce their exposure to tech, and then, so this will come down, and then they'll put those funds to work like in energy, okay, that's sector rotation. But in addition to that, there's something else that's very, very critical that's going on in this market. Funds are all piling into the same stocks, okay, which is driving them up higher than everything else. And the reason they're doing this is they've got to have, they're seeking alpha, right? They're all going for that high beta return to beat the index, because if they can do that and they can prove it year after year, they get more and more inflows. That's bigger and bigger bonuses, and that is the drum that they march to, okay? That's the beat of their drummer. So this causes more than two problems, but there's two main problems. It creates a self-fulfilling prophecy where to beat the indexes, everyone has to be in the same high-flying stock. So think of it. If you're going to beat the indexes, you can't just buy the index, right? If you just buy the index, what happens is you are the index. That's called an index fund. That's not what hedge funds are trying to do. They're trying to beat the index, because if they can't beat the index, then people are just going to put their money into index funds, and then they lose all their fat fees. So to beat the indexes, what they have to do is identify the stocks that have the potential to rise the most. But the problem with this is that they got to find liquid stocks. So what happens is that essentially the number one and number two largest market cap stocks in each sector typically become the high flyers here. And from there, you can go through typically the top 10, top 15 and see, but they're not going to be doing this with smaller stocks because the liquidity is not there. And it's a self-fulfilling prophecy. When a handful of funds start getting into one, all the algos at all the other firms pick it up, and they all start piling in. So we want to be and catch this move, but the problem is when it gets, there's a big, big, big problem that happens that I'll talk about here in a second, and that's point number 2. All right, so you guys all get that if everybody's piling into the same stock, there's a couple of problems that can happen. Most funds have charters, and it's going to be different for everybody, but let's say that any individual stock cannot represent more than 1% of the entire portfolio. So I've got a $100 million fund. I cannot put more than $1 million into NVIDIA, right? So what happens is, they start buying it. Maybe they put, $750,000 into the stock. It starts to rally. And then all of a sudden, and they got to check this at the end of a quarter, at the end of the month, NVIDIA is worth $1.3 million, okay? And the reason it's worth $1.3 million is, they loaded it up at $160, and now it's at, and they continue to buy it, and now, then it trades up to $220, and it's like, wow, the value of this stock is now $1.3 million. That actually violates our charter. We've got to sell $300,000 worth of the stock and put it to work in something else, okay? So they have to start lightening up. Now here's the deal. The algos know this, and they look for signs of distribution. When they see it, they start to attack because they have the same signals that the funds are using. So algos will front run this, forcing exits and creating a strategy that forces a reversion to the weekly mean very quickly. This is why we'll see a move like this. Goes up, consolidates, goes up again, and then violent retracement, okay? That's what's happening, and those can be a lot of fun. So the question is how do we tell when this is happening, okay? And of course, how to, how do we identify it, and then how do we trade that? So that's the kind of stuff that we want to look at. Yeah, and a lot of the times this can happen. It can happen anytime. So if it starts getting very far beyond their charter limit, then they have to start, they could start doing that at any time. But typically when they look at this is at the end of a month. Okay, so what you're going to see is end of month, beginning of month, this typically becomes more violent. Okay, but there are also specific signs to see when this is happening to a particular stock. So, so first here on the why, okay? So to beat the indexes, all right, they have to pick stocks that outperform the indexes, but the only stocks they can pick are the biggest highly liquid names because these funds are big, all right? So for a period of time, they might pour into Apple, and then Apple reaches a certain point, and then they got to, flop into NVIDIA or the semis, and then that reaches a certain point, they got to get out of that and get into something else, okay? So this is why that the largest market cap stock in each sector has outperformed the S&P 500 by 25% this year alone. All right, that's how big of a deal this is. The problem, again, is when that individual stock gets too big for the fund and they have to sell based on their charter, okay? Algos are sharks, and they spot this and they start to front run them, so the selling becomes violent even though we continue to be in the uptrend. It gets confusing, right? It's like, well, it's an uptrend. Aren't I supposed to hold? Well, if you're going to hold, a reversion to the mean on a stock like NVIDIA could be a 40-point decline. And I don't know about you guys, but even if it's in an uptrend, I don't want to hold through a 40-point decline. I either want to be out of my longs when that's happening, or I want to be in that trade with them, okay? So in other words, we are not seeing market corrections. We are seeing position corrections, okay? This is very, very, very key. And for these position corrections, we definitely don't want to get run over by them, and it is nice to ride their coattails and profit as they are profiting, okay? So what does this look like? So first, let's talk about momentum. And again, remember, the typical pattern here now, the typical uptrend pattern, it used to be, like this. It's like, oh, nice and sweet. Let's all hold hands and make money. And that is no longer the case. And if you look now at typical uptrend patterns, they're more like this. It's like, oh, okay, this is great. You don't even get the pullback. You just kind of, a little bit, and then you go up again, and then you get, because everybody's piling in, and then it reaches that point, and you think of this as like, okay, man, there's a high percentage of funds that have exceeded their charter here. And let's say the charter was 1.1%, now it's 1.5%. And the algos spot this and they start taking positions against this and they start shorting it. So when the funds start dumping, the selling becomes more exacerbated. And instead of a normal pullback like this, okay, you get this. And this is a reversion typically back to the weekly 21-period moving average, right? And it's not the indexes that are doing this. It's not the indexes that are doing this, although some of the sectors will also do it as well. So, yeah, sure, Bitcoin. So, Bitcoin, so this is something where, of course, in Bitcoin, this is something, and this is, and it's very good because this is something that is going to apply to Bitcoin as well. We're going to see Bitcoin futures. We're going to see all that. So here's I've been scaling out of Bitcoin during this, which, only makes sense. So here's a quick screenshot. This is what I've got left. So these are all Bitcoins that we got like at $200. I've got 12.73 left. The value on these is $223,724. And for these, I'm going to continue selling out. It's like, all right, let's just sell one Bitcoin a day and then probably hold on to a couple of them just to see. But these same strategies that I'm talking about here, I will be using on Bitcoin futures when they trade. And we can chart this on, like on TradingView to use Bitcoin themselves, and also on any other ICOs that are going to be doing this. And so the great thing is when Bitcoin futures are coming out, the same strategies are going to apply because funds are going to start getting more involved in it. Okay, so it's going to be fantastic for the cryptocurrencies. So, oh yeah, now if I could go back, I would have I wouldn't have sold any of them, and I would have bought more. But certainly it's fun to participate in it and all that kind of fun stuff. That is a high brew coffee. Time for a little, make sure I'm wide awake as I drive home tonight. So, so first of all, let's look at a buildup of momentum, okay? Now, this is a fairly simple concept because for those of you that if you've been around for any length of time, you know that I like squeezes, right? So the idea here is that if you can get, the more squeezes you can get lined up, the more powerful the move, okay? It's a very, very simple concept, and this is something that I just want to make sure that we're all aligned with it. So what this means with this is, in terms of thinking about this, is that, okay, are there hidden time frames and more time frames that we should talk about? And this is when I just picked up the phone and talked to Eric and said, hey, look, I can sit here and look at a weekly and a daily chart, but I want to know, like, across 16 different time frames that a lot of the times I'm not even watching, where are all the squeezes that are setting up? Because the more squeezes that are setting up, especially on the time frames they don't normally watch, the bigger the move's going to be. Okay, and this is, it's an easy concept, I think, to understand, but it's hard in practice to execute. So there's always that balance between idea, in terms of, okay, yeah, this makes sense, let's do it, and actual execution in terms of how easy is this to see, okay? So the idea with this is, in talking to Eric, is said, all right, so instead of looking at something, like this and just saying, hey, I'm going to spend all day staring at all these charts and seeing what's going on, can you just create a quick indicator to make this easier? And, again, luckily, Eric is, as a fighter pilot and, nuclear physicist, or maybe it's just physicist, but anyway, nuclear, it sounds good, right? The guy can come up with some very creative coding. And so obviously watching 10 charts and even 16 charts like that was kind of ridiculous. And so we talked about it, and I said, look, can you do this and have it not be a data or memory hog? And Eric was like, look, just give me a week. And he sent me the code. And so this is what we saw. And so we can spend some time tonight looking at some things that are setting up. But what's happening here now is, at a glance, okay, at a glance, I can see where the momentum is setting up, right? And these result in the biggest moves. So for LYB, you can see here it's got a squeeze on the daily and the 4-hour and the 30-minute. So yeah, I could look at all this and say, okay, I could spot that, and it's great that it's there, but again, it just saves so much time, and it's so much faster, okay, which is great. So yeah, and even from there, I said, all right, I challenged him and said, look, I want to get more active in day trading as well. So give me something that goes from the monthly chart all the way down to the 1-minute chart, because if the markets are moving very fast, if you guys traded in 2008, that was a day trading market. You did not want to be holding overnight. So I want to know what the 1 and the 2 and the 3 and the 4 and the 5-minute charts are doing if we get that situation again. Can you do that? And he's like, yes. Give me like 24 more hours. And when you get that kind of momentum, that's, as I go back and I look at the best and the cleanest moves this year, Red Hat was a super clean move. It's not an option that we bought at 5 and it went to 50, okay? It's not a Bitcoin, but going from 5 to 9 with no hiccups, okay, just very clean, that's what I want to see. NVIDIA here was a bigger truth. It's like, wow, we've got all this stuff setting up. Let's do a bigger trade on this. And that's, it's cash that you can then, take out of your account. So that's the kind of stuff I want to look at. So what's setting up right now is, one company here, PRA, okay, and I think this is healthcare, but this is one that got flagged. We got a 2-day chart, which I never watched, so that's a bonus. Then we got a daily, we got a 4-hour, 2-hour, and a 60-minute. Now, one thing I want you to notice here is this, okay? This is the 4-hour algos. Now, I will come back to this, but when you see a gap up and the 4-hour algos are kicking off, get out, okay? Because they are shorting. That is a target, okay? And you can actually reverse there too, but you can see it comes back from 84 all the way back up to 81. Now, if you're looking at the stock on a, if you're looking at the stock on a daily chart, you wouldn't know this if you didn't know to look for that signal, okay? So if we come over here and we look at PRA, on a weekly chart here, right? I mean, it looks great. It's just like, wow, this thing was solid. And if you were, if you're long this and you're holding it, there's nothing to worry about. But look at that. Look at that reversion back to the weekly mean. That's the 21 period moving average on the weekly chart. It's not a big deal if you look at this, but if you're trading this and you own $80 call options and the stock's at 84 and plunges to 78, that's devastating. That can wipe out that whole trade, okay? That's not what we're interested in. And so I'll talk a little bit more about this in a second, but when you see something like that, you just want to know that the sharks are coming in, okay? And it doesn't mean that the stock has topped. All it means is that what's setting up is I call it a reversion to the weekly mean, okay? It is a big, violent pullback, and we want to know when they are doing that, okay? Now, right now, once it gets there, then the trade's over. So now we can see that there's new momentum setting up. There's no algos shorting this, okay? So yes, I do want to buy this and get long, but I'm certainly going to keep an eye on those 4-hour algos, okay? So good question. After a drastic return to the mean, does the stock start climbing again? Generally, yes, especially if the indexes continue to float. So you definitely want to keep an eye on the indexes themselves, okay, because they will drive the market. But remember, this year, the volatility is not in the indexes. The indexes are like yawn. They're just, da, 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 da. But within the indexes, you've got individual stocks doing this, okay? So most of the people I know are doing individual stocks, and we just want to make sure of that. So long story short, I started getting really excited when I saw this, and so then I asked Eric the following. I said, look, this will be amazing for getting into huge asset class moves. So these multiple squeezes are great for things like the dollar and yen too, because those obviously have bigger implications. So if the yen has multiple squeezes, and we know that that's a correlation to these other things, it's going to move those other things too, right? So that's, that's a deeper and longer conversation. So I got excited about this, but I was like, look, I don't mean to be needy, Eric, but I also need tools that help me define exactly when the algos start front-running the funds on their largest holdings, so I know when the puke is about to happen. So this whole discussion that we've had tonight, Eric and I were having as well. So, the whole momentum thing is great. When there is momentum setting up, when the funds are accumulating a position and they're getting ready for the launch, yes, I want to know about that and I want to participate. But more importantly, I've seen so many times this year, these high-flying stocks suddenly revert back to the mean violently, and either being caught unawares, it's like, man, I really should have got out. And hey, I trailed up my stop, but man, it would have been nice to know that they were doing this. So A, I could have gotten out at a higher price, and B, I could have started shorting it or selling some call credit spread so I could participate in the move with them. All right, which is not too much to ask. So I wanted to know exactly when the algos start front-running the funds on their largest holdings, so I know when the puke is about to happen. Literally, I want to see when they're doing it, when they're building up a position, not this is the dreaded word. I don't want confirmation. Okay, what is confirmation? Confirmation is a stock's gone up and then it's fallen 40 points and broke the 21 period moving average. Oh, we've got confirmation that we're selling off. Okay, that's great. That's like we've got confirmation that the building's on fire after it's already burnt down, right? I want to know when they're actually accumulating positions. When are the flames flickering there in the background, okay? So that's what we want to look at. We don't want confirmation. Confirmation is hindsight. We want to see what's happening as it's happening so we can participate, okay? And I also, when they start prepping for sector rotation, okay, I want to know that as well. So I gave him the specific signals on multiple time frames that I wanted to use based on what the algos were using. And he said, all right, that sounds good. Give me a minute or 24 hours. So check this out. Now you're going to notice that there are different colors on here, okay? So on this, there's two different colors. There's purple and there's yellow, okay? Purple on this equals daily algo signals, which are more powerful. The dailies are the ones that'll run it back to the weekly mean. And the yellow are 4-hour, okay? And those will typically run you back to the daily mean, okay? So weekly mean is the weekly 21 period moving average. This is daily mean, which is the daily 21. Okay, they're both pullbacks. Obviously, these are more powerful. When you see both together, it's pretty huge. So look at NVIDIA. It gets up here at 212, and now you got the funds loading up. Boom. Violent move to the weekly mean, and then we've got earnings. After earnings, check it out. 4-hour and daily algo signals, they are loading up. Now, it doesn't mean you're going to get a violent move, but here, look at this. We look at the structure of this, the structure of distribution, okay? We cannot really get anything going. And what's great here, it also shows and denotes false signals. It's like, oh, wow, look at this head and shoulders bottom. And look at this. This is the kind of false breakout that they want to see so that the, people kind of get sucked into this and they can sell more. And ultimately, when this breaks, boom, okay? That's what's important here. Now here you're going to see that there's some 4-hour buying. That's not a signal that this move is done and going to go back. You need the, kind of the purple for that. But it is something you can say, all right, now I want to get out of my shorts and maybe do a day trade long. And that's a nice move from 193 to 200. But that's a good, hey, I'm going to cover my shorts here. Okay? So hopefully that makes sense. I mean, that's the kind of stuff where it's like, yeah, let's get on the right side of this. So what about the Qs? Now the Qs here, the Qs have been holding up pretty well, but the same thing has been happening here. We did get daily and 4-hour signals here, and we did get a reversion back to the weekly mean here, okay? And then here we've got the 4-hour and the daily, and we got another slam, okay? So just when you see that, it's such a beautiful signal to say, you know what? Let's at least get out of the longs here and do something else, go trade Bitcoin, or start selling call credit spreads, start scaling into short positions and long puts. All right, so hopefully that makes sense, but it's kind of more, it's more about just kind of understanding and following the footprint of the market. All right. Now the opposite works too. Okay, so this is an example of AutoZone, and at some point AutoZone will get so stretched that the funds will start buying it again. Okay, and you'll see the exact signals here, and you can see the same thing too, because there are times too when they've dumped something because it was a darling and it no longer is again, but at some point it starts triggering value alerts. And it's like, all right, let's start rotating back into this, okay, so we can participate in a reversion back to the mean to the upside, okay? It works both ways. Now, we talked about the pink signals, okay, equal daily algo. And then the yellow equals the 4-hour algo. Now these blue equals the 30-minute algo for day trading. Okay, so what does this mean? This means that on the NASDAQ, and this is, recent chart here, yeah, it's going down, it's going down, it's going down. Okay, they're starting to scale in. Boom, we get a reversion to the mean to the upside, okay? But once we get up there, they're done. They start taking profits and now scaling in short, and boom, okay? That's for day trading. It's reversion back to the mean on a 30-minute chart, okay? We're not looking for any big moves, but that's something you could be in a trade for a couple of hours. So what's beautiful about this is it does work on different time frames. Okay, so I like the whole idea, of course, of this a lot. So yeah, so Steven, so that's your question about intraday futures. So that's a 5-minute chart of the NASDAQ. Yeah, no, Green Bay. We can certainly look at a couple of examples here, and you know, like anything like this, it's always like, oh, okay, hindsight, you know, what's going on in hindsight, but what's happening in real time. So if we look at, say, and of course, you know, we got the, whatchamacallit, what's happening tomorrow. We have the employment numbers tomorrow, so there's going to be a lot of, you know, volatility and things like that too. Now, what's interesting is tonight we're starting to get some buy signals in gold, some 4-hour buys. If we look at a daily chart here in the Qs, you'll see that right now it's worked that off, okay? So the last couple days here, we did get some daily kind of algo sells, and since then we have gotten a reversion to the mean, and now there's no action, okay? If we look at XLK, same thing. You know, we've been getting signals for reversion to the mean, and of course, you know, the Amazons and everything like that have taken the brunt of this. So this does happen also, you know, if you're looking at it and say, okay, well, let's see what's happening on more of a day trading type basis. And, you know, you can see, especially here's some extensions. It's like, okay, yeah, they're picking some stuff up there. But right now, it's just kind of calm. You know, there's really not too much going on there. Let's see if there's other high flyers here. So it just kind of depends on the time frame and everything like that you're looking at as well. Okay, so now that's a good question, Christo. So do you think that now that you figured out the algo the funds are using, what are the chances the funds will not change the algorithm? Well, the thing about it is that the only way they'd want to change the algorithm is if the big funds, the mutual funds, started changing their strategy. And there's no sign that they're doing that because they're making too much money as it is. All right. So anyway, I liked it a lot. At the end of the day, the markets are evolving and we want to continue to have an edge, right? And the only way to have an edge is to know what the algos are doing, right, when they are doing it. So let me see what else. I can look here at a couple of other things and just kind of look at some other examples here. So what's interesting right here, well, we can even look here on the S&Ps. So S&P futures for those of you for those of you guys that trade it. So, you know, on Monday, we were trading up here at 2660 or so, and we're getting signals all over the place, and the market looks super strong. And then what happened is that, you know, we went from 2660 to 2620, and it was kind of unexpected. But you can see here now, we're not getting any corresponding, you know, we're not stretched to the downside too much yet. So we could go either way, you know, for tomorrow for sure. Let's see, from there, even a strong stock like, let's say I was thinking, oh, like a Facebook or something like that. You know, you can kind of look at these things and just say, all right, well, how is a Facebook faring in a situation like this? And it's kind of the same where, you know, in this case, we're having this beautiful rally and it looks so strong, but we're getting the 4-hour algo sells, okay? Now here you can see they're kind of buying and covering, and it did get a little bit of a pukage here, but ultimately had the nice rally, okay? And the key with this, you got to remember what the algos are doing is a scale in strategy. And so you want to understand their specific scale and strategy and how they do that and take advantage of it. So it's kind of cool that way. And we can look at more. So and really what we want to do is, I start looking at this too on the sectors, is understanding in terms of the key sectors, these are all the liquid ones. So we just want to know, all right, XLB, is it having any signals here? And if it's having signals, then we want to go look at the biggest components of that, right? And on and on and on. And that is the key with that. All right. So anyway, so let me tell you a little bit about the class I'm doing on this, and then I'll stick around here and answer questions. So if you are interested in this class and these tools, all you have to do is go to simplertrading.com/ETF. Now, I talked about this last week, and we've added a bonus to this as well. So a couple years ago, I did an entire class, and originally we were looking at this being a more ETF-heavy class, but what I realized is as I was doing this is that there's actually a lot of action in these individual stocks like the NVIDIAs that are actually also having violent action. So I don't want to just limit it to ETFs because, yes, it's working on ETFs, but it's also working on these individual stocks that we want to identify, as well as like day trading futures and things like that as well. So what I'm going to do is this class that I did a couple of years ago called the ETF Secrets course is going to be included. Okay, so this is a very extensive deep dive Saturday class where we went through and talked about all the key components to look for in ETFs, how to use futures to time your trades in ETFs and get better signals on ETFs, exactly which options to buy for big moves, and it's a very, very deep dive. Okay, so that's included with this. But the main meat of this class is going to be on the Saturday class, which is December 16th. We're going to go through, for those of you that are newer to options, from 10 to 12, there'll be an options basic course. This is just like, hey, this is a call, this is a put, this is premium decay, all right? Then from 12 to 4, we're going to talk about the haystack method, which is the multi-squeeze indicator. Okay, that's finding those big momentum type stocks. So that is the 497 package. The one that most people are doing is the elite, and that includes all of this, but it also includes this top hat strategy, and that's the pink hat. It's the pink, the yellow, the blue. For the daily, the 4-hour, and the 30-minute for swing, intermediate, and day trading as well. And we'll talk about that in strategy. But here the strategy is going to be specifically how to identify it and the specific strategy for scaling in, okay? Because you're going to be initially going against the grain, so how do you scale into that? And then this also includes 3 live trading sessions where we'll be doing, of course, the multi-squeeze strategy live trading and reversion to the mean live trading. Okay, so any questions on that? I mean, I'm super excited. This is going to be an awesome class, and just want to make sure you guys understand it, understand the basics, and then we'll go in and we're going to take a deep dive into the specific strategies around this on that class. Do both the multi-squeeze and top hat indicator work on TradeStation? So yes, Stuart, so those are currently being programmed for TradeStation as well. Tom, I think the add-on was a spreads class, but if it was the ETF class, yeah, we would take care of it. But I believe that there was an add-on for a spreads class, and the spreads class is more about how to do specific spread trading strategies, which is actually something that if you don't know is actually going to be very good to do. And then this ETF class is specifically on, hey, this is what an ETF is, this is why it's important, and then these are the signals that you look for, and these are the options that you would get on that. So Ralph, great question. John, there's an ever increasing number of ETFs. Is this causing an increased stock price pressure? Yeah, so what's happening with a lot of these funds is they are getting their liquidity and kind of their first buying decision in the ETFs themselves. Absolutely. And so those ETFs, of course, then have to buy and sell whole bricks and packages of stocks. Oh, yeah. So if we have already signed up, will we get the indicators prior to the Saturday class? Yes. And then Eric will also spend some time on those as well. So the Saturday class is going to be Saturday, December 16th. And then the live trading is going to be the 18th, 19th, and 20th. And so we're knocking that out on a Monday, Tuesday, Wednesday, since, of course, over that weekend is going to be Christmas. So we want to make sure people have time to, if they do want to go see their families and stuff like that too. And I will talk about here in a second what the master course is for, because that one's a little bit more for more advanced traders in terms of the power correlation strategy, but we'll talk about that in a second too. Let's see. Okay, what types of position entries are used in these strategies? Are they long ETF stock, long option, option spreads? So So the short answer to the question is yes. You can do a variety of things. So if you're starting to get the signal, so here's what the algos are doing, okay? So when you see something and then you start to see kind of the little indicators that they're starting to take a position. So let's say it's NVIDIA. Due to liquidity, they're typically shorting the stock, okay? So that's a sign that they're starting to sell the stock into strength. Now, if you've got a large account and you want to sell NVIDIA at $240 a share, that's fine. For most of us, we're interested in using options simply because of the leverage. So part of the strategy is twofold. There's one strategy if you just want to do long puts, okay, and it's you do not want to take your position all at once, okay, and your position size is going to be based on how many of these hats there are. So on the first one, what kind of position do you take versus on the fourth one? And that you want to understand so you're in alignment with what they're doing so you can kind of hold on to a move against you, because initially you're going to have a move against you. And there's some different strategies for that, but also too you can sell call spreads. Okay, and so there's a couple different things that you can do like that, and but a big part of that will be scaling in with that. All right. Oh, good question. How is this different than the triple squeeze? So what the triple squeeze does, and the triple squeeze is still, it's fantastic. So triple squeeze, okay, what that's going to tell you is, hey, I'm looking for a squeeze to happen on the Qs, XLK, and Facebook all at the same time on the same time frame. Okay, so say you're looking at a daily chart, and if the daily chart of the Qs has a squeeze, and XLK has a squeeze, and Facebook has a squeeze, well, that's fantastic. Okay, and that means Facebook's going to have a big move, and that's something that we want to know. But what I also want to know on the multi-squeeze is, regardless of this, I want to know if Facebook, here it has a squeeze on the daily, but what do the other 16 time frames look like? Because what I found is that, yeah, if it has one on the daily, and it's very rare when the, Facebook, XOK, and the Qs all line up, but when they do, we want to know about it, we want to track it. More often than not, you're going to get a situation where if you get, say, 5 or more multiple squeezes on Facebook, you're going to actually get a same or more powerful move than even something like this. So we want to pay attention to both for sure on those bigger stocks. So what day is the elite training on Top Hat? So what we're going to do, and this is going to be a little different. So we're going to do all of the training on this on Saturday. They're just going to be in different time frames. So this will be from 12 to 4. And right now, I think we've got this like 4 to 5, because the strategy itself, we won't have to, it may take longer than this, to be honest. That's what we've got it blocked for. And if you can't attend it, we'll have it recorded. And then we're going to do the master, like say from 5 to 6. But we just thought that instead of doing this during the live trading, we'd knock it out on that Saturday class. We can also play it by ear, and if at that point you guys are brain fried, we could just do it during the live trading sessions too. But we'll, I think we'll at least get the basic strategy covered during that time. Okay, so, so let's talk about the power correlation. Okay, so the power correlation tool is kind of a last-minute addition that Eric created, and I just thought this was fantastic. So again, this is going to be for people that are more advanced, typically. So you don't have to worry about this so much. But let's say that you see these top hats, and you're like, all right, this thing's about to pull back here. But maybe you've got some longer-term holdings, and you're not really too crazy about dumping everything. So right now, what you can do with this indicator is you can actually type in exactly what you have. You can manually say, look, I don't have any cash right now, and I've got 20% of my portfolio in Apple, 20% in Amazon, 20% in Facebook, 20% in Microsoft, and 20% in Netflix. What's my correlation to the Qs? Okay, or you could type in FXE. What's my correlation to FXE? So you've got a 0.8 correlation to the Qs, and this means that if the Qs take a nosedive, your portfolio is going to get killed. Okay, So if you've got a larger account, you're like, I don't really want to hold that. What can I do here? Well, you could swap a few things out and just say, all right, you know what? I'm going to, I'm going to buy some yen ETFs and maybe swap out, one of my stocks for Disney or whatever. Well, so now your basket correlation goes down to minus 0.2, so that if this Qs does drop, your portfolio will actually make money, okay? So that's what's nice about it, because then you'll know exactly what your portfolio is likely to do in the event it tanks. Or if there's a squeeze on the yen and it explodes higher, you can type in the yen up here and say, hey, how is my portfolio correlated to the yen? If the yen goes higher, is it going to hurt my holdings? Okay. So this to me is very, very powerful and very exciting. I would certainly call it a more advanced tool. Okay. So if it's one of those things, you're going to look at that and say, oh my God, that's amazing. I got to have that. Awesome. What this is included in the master session. Okay. So in the master session, we're going to do, everything in the pro session. Okay. Same instruction, same tool. Everything in the elite section, same instruction, same tool. You get that indicator. And then also you get we're going to talk about the specific strategy for correlations and kind of setting up your portfolio and the tool itself. So if you look at that and say, okay, that's amazing, then that's what that is. So, and that'll be fun as well. Okay. Yeah, we are looking at doing the tax loss trades the last trading day of the year, which will be great. Well, so initially what we do with these tools is we get them programmed in Thinkorswim and TradeStation, and then from there, Eric starts going through some of the other ones, and a lot of it's based on demand. So if we get people asking like, well, what about this and what about this? It's like, all right, let's look and see, if they're capable for that. Please look at Google. Yeah, so here's Google on the hourly chart. So here you can see what I call the 4-hour algo signals. So how did it work? It's like, okay, so here you can see they're kind of accumulating a position. We get the reversion to the mean. We gap up, they're accumulating a position, and it's kind of sloppy. Get new highs, they're accumulating a position, whack. And now here you can see they're covering and they're accumulating a position for a reversion to the mean the opposite way. So it's pretty remarkable, because what happens is you actually start getting in the flow of what they're doing. And oftentimes without that, it's easy to kind of get, it's easy to say, gosh, this thing's going to go up forever. And it's like, well, these guys are shorting the heck out of it right now. Okay. Or, oh man, now I'm so bearish, this thing's going down. Now you can buy the dip. Okay. Now you can buy the dip. So that's what I like about it. It just kind of, it gets you on the, you're on the, it's kind of levels the playing field. All right. Okay, no, Bryant, good question. So what about, you've had other indicators, the 10X, Ready Aim Fire. Why the new indicators? Where does it end? And my honest answer to that is, it's, I don't know if there's an end. It's okay. Have the markets now, do the 10X bars still work? Yes, they're great. I'm looking at it. Ready Aim Fire. Absolutely. But what happens is, and a lot of times these tools, they create a better understanding of the market, which creates that better understanding of the market creates ideas for more tools. So it's more of a, okay, well, if the market's always doing the same thing, and, it doesn't mean that the other tools are now outdated. It just means like, hey, wouldn't it be nice? Look at the markets here. What's up with the VIX? Why is it so low? What's going on here? Oh, this is what the algorithms are doing. Great. How do we get on the same side as what they're doing? So that's kind of it. It's almost, if you think of it as, if you build a car and you're tinkering with it, and you always find ways to improve it. It's like, oh, well, let's put this valve here and let's do this. And maybe there's better ways to roll this out and stuff like that too. But I think it's part of trading to me is always looking at where's ways to continue to get an edge. And a lot of times it's the tools. And it's interesting like that is that, you get one set of tools that helps create a better understanding of the markets. And then that better understanding of the markets leads you down the path to that next, like, oh my gosh, well then we could do this, but this wouldn't happen without the prior two tools. So, it can get something where, and again, I have 6 monitors and I look at a lot of stuff, and during the Saturday class, I'll show you how I lay it all out. But the idea with this stuff is to continue to give us an edge based on what's happening now in the markets, okay? So if that makes sense. But it's, the markets are always changing, and we always want to stay on top of them. Yeah, so the goal with this, Deborah, and this will be, and again, this will be a little bit of a moving target. So on Saturday the 16th, so the options basics, that'll be from 10 to 12, and this is all Central Time. This general kind of haystack method deep dive will be from 12 to 4. And then the reason it's 12 to 4 is we're going to spend some time, more on assuming that there's people that are newer that maybe need a little bit more explanation of, hey, this is why we do this kind of option and stuff like that too. But then with this foundation, we can dive right into this. This will only take an hour, or so 5 to 6. It'll probably take a little longer. And then this from 12 to 4, or 4 to 5, and 5 to 6. Now, what we may do, and I'll just I can just quiz you guys too, is at some point, if everybody's brain's fried, we can move this to the 18th, to the 19th, or the 20th as well, okay, or December 16th. So we'll just, but that's the schedule in terms of how we're doing that. Yeah, Ralph, I would say rebalancing falls into this as well. Absolutely. Okay, so Andrew, that's a good question. So what if the 16 time frames are all squeezing in different directions? So you defer to the highest time frames. We'll definitely be talking about that on Saturday. But, if you've got a weekly and a 3-day and a daily that are all bullish, and then a 5 and a 15-minute that are bearish, you default to those higher time frames. So a 5-minute squeeze may fire short, okay, and that's fine because, you want to use that pullback on the larger time frames to buy it. But where it gets really powerful is when they're all lined up. And then what happens when they're all lined up is that 5-minute and 10-minute chart actually acts as the ignition, acts as the spark that lights the fire of those larger time frames. The MTF, multiple time frame squeeze tool. If you're asking, so there's the multiple time frame tool actually measures the trend on each chart. So it's like, hey, here's 5 time frames above it. Are they bullish or bearish? Instead of actually the squeeze. So these tools actually all do work really well together. So the live trading is, so again, this will be in December. So the Saturday class is going to be December 16th. And then the live trading is going to be December 18th, 19th, and 20th. Normally, it's a Monday, Tuesday, Wednesday. Normally, we'd say like a Tuesday, Wednesday, take a day off, and Friday. But, of course, there's Christmas coming up, so we just want to knock it out. Mark, I'm not sure, which indicator? The indicator. So here's what we do is if you're interested in the classes and you're like, okay, I like all the indicators, but let's say that the only thing you want is the power correlations indicator. Okay, you're not interested in this, you're not interested in this, you just want the correlations indicator. What'll typically happen is once we're done with the class, we'll do a webinar just about the indicators themselves for people who just want the indicators. Typically, though, what we do is, like this, the classes are meant to also instruct on how to use the tools. So it's kind of like the class and the indicator is almost the same price, at least with this one as the indicator itself, if that helps. Yeah, and the thing about this too is this, yeah, it's a great concept. It's amazing. Eve, does it work for day trading? Absolutely yes. If you're a day trader, you will love this for day trading. If you look at, really any, I'll bring up, let me see, what was one I was looking at the other day? I mean, we've had some fairly crazy moves here. Where was the one? Oh, the Qs. I'm trying to find one without all the spikes. So, I mean, if you look at something like the spiders, and you can look at the S&Ps too, I mean, this is where you're seeing all these daily signals. But then, you're starting to get some, the blue ones are for day trading. So I call those the day trading buys. And you're just kind of looking for, those intraday kind of tops and bottoms and things like that as well. If you look at something that's been pretty volatile here, like Tesla. Tesla's been running, and you can see here that today we even got some day trading sells. It's like, okay, and this is why you got to scaling in here at 315 and up to 318, and then finally you can see it starts to puke. So very effective, and this is on a 5-minute chart. Is the top hat effective only for the leaders, or does it work on any stock? No, it actually will work on any stock. So like on AutoZone, that was one that I wouldn't really call it a sector leader. It never was one of the largest leaders or anything like that. But at some point, it did generate some signals here. So you see you got some signals here where you got a reversion of the mean. IBM also, I thought IBM also got that low too. Maybe not. Let's see here. Let me go back a little bit further here. Yeah, 10 years. Yeah, okay. So when IBM got crushed here, it also had that too. So, IBM's or AutoZone, but some of these are not. They don't have to be Apple, right? They don't have to be ExxonMobil. They don't have to be the biggest stock of each sector. All right. Yeah, absolutely. So what about Forex, like EUR USD? EUR/USD. So looking at this on, so same thing here. So here's the euro. We got a nice gap up here into 119.40, 119.60, and you can see piling on, reversion to the mean. So the nice thing is yeah, it's and I'm super excited to start using this on Bitcoin futures when those start trading. Yeah, so good question. Do the top hats overpower squeezes? So here's how, and let me see if I can find an example of those together. All right, studies, add study. Okay, here's a perfect example. So on the euro, okay, here's a squeeze. Now, man, I love this. Look at the squeeze. It's going great. But man, you can start to see like, man, there's some red flags here. So on something like this, very simply what I do is, I'll still hold on to that momentum, but once you see that loss of momentum, okay, you got a double whammy here, and they're shorting it. So not only will I start to exit, okay, my longs, but also start looking at a sell signal. Okay, so a lot of times what happens is you could get these big moves, and near the top, doesn't always happen, but when you get these at the end of a squeeze, sometimes when there's a powerful squeeze, you're like, oh, let's just see how long this can go, or let's hold through the next consolidation. No, get out. This thing is going to revert all the way back from whence it came. Okay, so that's an easy and aggressive way to play both sides of the market. All right, good deal, good deal. Yeah, let me look at a couple of other ones here too. Yeah, and so on a stock like that one, yeah, always evolving. Yeah, and Steve and Debbie, is exactly what we're going to be talking about on Saturday. So we'll go through exactly the strategy, the triggers, and all that fun stuff. Yeah, so for crude oil, now crude oil has been very volatile here. So if we look at it from, this perspective, you can see it's been staying, it gets a little stretched, boom, gets a little stretched. If we look at this from a daily perspective, you can see down here we did get some extensions. Down here we did get some extensions. And right now we're not getting any upside daily extensions there. Does this work for smaller stocks like the Microsofts, et cetera, et cetera? Yeah, so it doesn't have to be a $150 stock. So here's Microsoft. So you can see here on Microsoft, we did get some signals here. We reverted back to the mean. Now, it doesn't mean that the uptrend's over, right? But look, it's reverting back to the mean, reverting back to the mean. That's the kind of stuff that we're looking for. So again, not big moves, but I don't know about you guys. I would rather either be out when that happens or at least be short. All right. No, awesome, Dave. Yeah. No, this stuff's fun. I mean, again, it's, it is like a laboratory. You're always kind of tinkering. It's like, all right, how much is this going to do? Yeah, no, Mark, and I've had a couple of people ask about, focusing kind of heavily on day trading. Part of what we'll do during this class is we will do some day trading of futures and things like that, because when you have a top hat indicator, you also want to see how it's doing. You want to be able to you got to take more swings at the golf ball, so to speak. So we'll be trading like some 5-minute charts and stuff like that too. But yeah, I would like to do, we'll set up a class where it's just more day trading. That's always fun. All right. Let's see what else. All right, so there's other questions here. I think I've got the gist of them. Which one is the top hat indicator? So the top hat indicator is this one. So if we look at, if I can find my chart, that would be amazing. So if we look at Microsoft. So this is a 5-minute chart of Microsoft, okay? So the top hat indicator is this. In this case, it's a bottom hat saying, hey, they're going to fade this for reversion back to the mean for a day trade. And then here's the haystack. All those, it's like, wow, Microsoft right now has squeezes on the 5, 10, 15, 20, 30, and hourly charts. How cool is that? Shart, I like the name. Are the indicators generating alerts? Are they capable of that? Eric, so probably the top hat indicator would have alerts maybe. I don't know about the haystack or if it's something that could be added. I can double check though. Yeah, so Eric is just answering saying that we can do alerts for the top hat, which makes sense. Okay. Could you use this to trade stocks? Absolutely. So when we sit there and we'll see it on, like I say, Microsoft, you could actually trade Microsoft or options on Microsoft. So it's all based on the underlying. No, yeah. So for crude oil, so I don't believe right now that this is capable to work with capable of working with tick charts. I think that may be something that we could do. Initially, it is these intervals. However, if you want to day trade crude oil on these signals, there's a couple of things to look at here. First of all, you'll see it's like, all right, cool. Right now we're getting a squeeze on the 30, 20, 15, and 5-minute chart. Now, day trading, you got to, it's like, okay, but when you see the yellow 4 hours, that's typically a good sign that crude oil is bottoming, okay? And then, and again, remember, all it's doing is reverting back to the mean. So our reversion to the mean trading. Yeah, even Netflix. So Netflix, which is one, has been kind of, so when Netflix was getting spanked the other day, at some point, buyers did step in. So here you can see day trade from at that level, down from 181 down to 178, they're buyers, and all of these buyers are profitable. From a topping perspective, if we go to the daily chart here, you can see it's like, all right, we had, top hats here, boom, top hats here, boom. We did not have any top hats up there, but we had them on the Qs. And if there's top hats on the Qs, remember, it's going to drag everybody down. Yeah, so what about, okay, so what about a strong momentum stock like a YY or Roku? Now, something like a YY, what happens is that these reversions to the mean become very, very quick. So it's a good signal to get out and buy the pullback. So boom, reversion to the mean. Boom, reversion to the mean. Boom, reversion to the mean. Okay? So again, keep in mind, it doesn't mean that the move is over. Okay? It's not saying, hey, this thing is topped and it's never going to go up again. It's just like reversion to the mean. And it's a little bit, reversion to the mean, reversion to the mean. That's all what we're looking for. Okay? So very powerful because it's, it's kind of obvious after the fact, right? All right, let's see. What other questions there are here? Yeah, and you can even, like on Square, on this huge spike up here, and then bada boom. Now, and sometimes, especially newer stocks, you'll get a lot of these, but it's always just good to be aware of them. Yeah, Joseph, I believe the indicators. Hey, Daryl, what day are we going to release the indicators? I know we're getting all the packages and stuff like that. Are we going to do it I'm assuming the day before the class, maybe? Okay, perfect. So yeah, so we'll do it actually a couple days before the class. So we're going to do it on the, you'll get the indicators on the 13th, so you can install them, get comfortable with them, play around with them, and then of course we'll do a deep dive into them on that Saturday, and then for those of you doing the live trading, we'll do some of that as well. John, with the multiple time squeeze the time frames, do you change your outlook on profit targets if you're in a 30-minute trade, then a 60-minute fires off? Yes. So that's part of what we'll definitely be covering on Saturday. So part of what I like about the multi-squeeze is that it allows you to stay in trades longer that you might normally even understand that there's a bigger thing going on there. Okay, so there's some real cool stuff that we'll be able to dive into there. All right. Yeah, and we have been using the squeeze on TradingView for Bitcoin, Ethereum, and things like that too. Yeah, absolutely. Let's see what else here. Can you show SPX 5-minute, please? Sure. So 5-minute chart of SPX. So we've had a lot of dailies here, you can see. And then once it started going from about 2660 down to about 2630, that's when we got the day trading buy signals. So we've had a little bit of a bounce from 2625 up to 2635. Costa, any chance of having the multi-squeeze indicator on the watch list gadget? I don't know. So stuff like that is, once we get it coded as an indicator, then there's a lot of things we could potentially do after it. Initially, though, and my honest answer to that is I don't know. I'd have to ask Eric. But it's one of those things that when we get something on there, sometimes we may actually have to send it over to Thinkorswim so they can embed it. No, so good questions, Andrew. Are the time frames customizable, i.e. 39, 78, 195? Unfortunately, right now, it does not work with the customized time frames for the multi-squeeze. That is something that we're going to look at. I did go through and say, okay, well, with the 20 and the 30 and the 60 and the 2 hour, it should catch some of those. So I do wish that it did those. It unfortunately does not have that capability at this time. If at some point it does and Thinkorswim continues to kind of build that out, great. That would be a free upgrade to you guys. Will the haystack indicator be incorporated into the scanner at some point in the future? So the answer is that anytime we release stuff like this, we always look and see what we can incorporate into the scanner. I would want to look at some of the stuff that we can. It's one of those things that actually takes some testing. So we always try. We just don't know if it's going to be able to, like getting stuff into the scanner actually does take some work for sure. Does the top hat indicator work on mobile? I don't know. I actually, it's one of those things where sometimes the things will pop up on mobile and some not. So that is something I can check though. When looking at so many time frames, how do you decide which one to trade? If you are in a trade and the 5-minute fires off and then a 20 and then a 30, are you okay? So that's a great question, Mark. That's definitely something that we'll dive into more. So what I'll do on something in a situation like that. So let's look at PRA. Okay, so this is an interesting one. So PRA has got a 60-minute, a 2-hour, a 4-hour, a daily, and a 2-day chart. So let's look at a daily chart. What does that look like? Okay, well, there's a squeeze developing right now. Are there any top hats? No, and that's actually something I look at now because, I don't want to, dive into that if it's going to get all nasty on me. I can look at a weekly chart here and say, okay, well, we've got a nice uptrend going on. That's great. So what I would do on a situation like this is say, okay, well, if, in something like this, and let's go look at the 2-hour chart or the 60-minute chart. So on the 60-minute chart, there's a good looking squeeze here, right? That looks pretty good. But what's great about this is let's say that the 60-minute squeeze fires long, okay, and this is going up to about 84 and this is starting to look at losing momentum. But then, the 2-hour squeeze or the 4-hour squeeze just gets going, okay? And I actually can, and I'll, on these time frames here, what we can do is say, okay, let's build out, let's add our more of these custom ones here and say for 360 days, let's add the 4-hour, and and I've got all these at home, but it didn't carry up over here. And then to say, okay, great. Now I can say on the 4-hour chart, wow, look at that squeeze, right? So that's the stuff that gets, what I like about this is that I'm essentially allowing yourself to roll into a bigger move. If you've ever been in a trade, it's like, okay, it's up 2 points and it hits your target and you get out, but it goes up another 5 points. And it's like, hey, I appreciate making the 2 points, but man, it would have been nice to know to hold on for the whole move. That's what this is designed for, because what happens is that, if you take the 60-minute chart, it can then trigger into the 4-hour, which triggers into the daily, which triggers into the 2-day. This could turn into an incredible move. And what's great about this is that you're getting in early, okay? I think of it as, this way, as like this is kind of the spark. The 60-minute is the spark and you get in, and that's going to be your lowest risk trade, all right? So I get in, there's a 60-minute squeeze, I'm going to put in a tight stop, because if you're getting in on a 60-minute squeeze, then you can use a stop loss on a 60-minute chart, which is a much smaller stop loss than on a 2-day chart, which we'll talk about on that Saturday. So you're getting your lowest risk entry. You have the lowest potential risk and the highest possible reward when you get a chain reaction of squeezes. So that's what we're looking for. We like that chain reaction. All right, guys. Would you show the indicators on the metals? Sure, let's bring that up. So if we're looking at gold right now, and gold will be interesting tomorrow. So on this dip here, you can see we're getting plenty of 4-hour and 30-minute buy signals. Now, I, for one, would not be buying gold prior to the employment numbers, but somebody is. And if we look at a daily chart here, doesn't look like we haven't gotten, so, and gold's been quiet, so we haven't really gotten much on a daily perspective. When was the last time we got dailies? Here. So gold's been super quiet. That just shows you how quiet gold has been. On the daily. So on something like this, you'd want to rely more on the 4-hour and things like that. Absolutely, yeah. So I'm definitely going to be using these on Bitcoin. Oh, awesome, Brad. That's good to know. Yeah, and if we look at something like Home Depot right now, just keep in mind, Home Depot right now is getting shorted by the funds right now, okay? So this is something where, man, Home Depot has had a great run. So, it's had a squeeze. But at this point, I certainly would not want to be long the stock anymore, and I would consider that it's setting up for a violent reversion to the mean. Okay? Now, here's the main thing with this. You don't have to short it if you don't want to. Just get out of your longs. What's happened here, this is telling you that the odds are exponentially increasing for a reversion to the mean for all the reasons we've discussed. It has nothing to do with the quality of the stock itself. All right? All right, guys. So that's that. Again, simplertrading.com/ETF. This is going to be a great class. These are fantastic tools to add to your toolbox. It'll get us ready for the rest of this year and for 2018. The indicators will be released. I'll write these up here real quick. The indicators will be released on the 13th. So that's the indicators release date. Okay, this will be Saturday, December 16th, and then this will be the 18th, 19th, and 20th for the live trading. Okay, and then I'm going to attempt to teach the strategies for all three. So if you signed up for Pro, we'll be working together from 12 to 4. If you signed up from the Elite, we'll be working together from 12 to 5 because you do both. And if you're doing the Master, we'll be working together from 12 to 6. Now, we may need more time than an hour to talk about this. Okay, we may need more time than an hour to talk about this. So that's a little bit of an unknown. However, we'll be able to take a deep dive into it right away. There won't be any prep because we'll have covered a lot of the prep here. So we haven't done it like this before. We'll give it a shot. If you have to miss any of it, that's fine because it'll, of course, be recorded. And I'll just take a survey. If you guys are brain fried, by 5 o'clock or whatever, we could always do it on these days too. And again, if you miss it, it'll be recorded, right? Okay. So that's what I got. And I think that's it. There's more info on the website there at simplertrading.com/ETF. If you if you have any questions, you can give us a call here at 512-266-8659. Apparently, we're all going to be camping out here since it's snowing here in Austin, and nobody in Austin knows how to drive in the snow. But you guys have a fantastic evening, and looking forward, for those of you that are doing the class, certainly looking forward to working with you guys, and have a great night.